Filatex India is the company on our radar. It's one of the largest manufacturers of polyester yarn, and the company has commissioned its project for debottlenecking, a melt capacity of 50 million tons per day and manufacturing lines of 120 million tons per day. They've just commissioned that at their Dahej plant in Gujarat. To discuss more on this development and the business outlook, we have Madhu Sudhan Bhageria, who's the Chairman and Managing Director at Filatex India, who joins in. Mr. Bhageria, good morning and thanks for joining in. If you can tell us a little bit about this expansion, now that you have commissioned it, what are the kind of peak revenues that you expect and what will this take your total capacity to?
Yeah, good morning. First of all, I'd like to correct you. This is not million tons, it's metric tons only.
Okay. Sorry about that.
Yeah. So this will take us capacity to almost 400,000 tons per annum. And peak revenues would go to around 4,500 crores. Going forward, we are thinking of adding more value-added products. So that will not add the top line, but that will add the increase in the bottom line.
So this 4,500 crores, in FY22, you ended with about 3,800 crores of revenues, a little over that. So this 4,500 crores is for FY23?
FY23, we do around 4,250 because this 120 metric tons which we have added per day is basically a value addition. So we were making chips. Now those chips will be converting to yarn. So that is what we have done. So the top line will not increase substantially, but it will give an effect on the bottom line.
So what would the bottom line impact be, sir?
It's difficult to guess right now because the markets are not very good because of China. China this COVID policy, zero COVID policy. So they are dumping the goods everywhere. So the margins are under pressure. As and when China opens up, I think we should be doing better. And we think going forward, we should do more than double digit of EBITDA.
But, right. Is there any protection available for the industry against this kind of dumping? No.
No, right now there is no protection available.
There's no, okay. Could you just tell us what is the situation? I mean, I think at the end of the first quarter also you said, I mean, back then I think you'd referred to a lot of volatility in crude oil prices, which kind of did not allow you to realize the full potential back then. What's the situation now, if you can, both demand and raw material side?
Demand side is good. Raw material availability is slightly a challenge because there is some disruption in the local supplies. And internationally also availability of one of our raw materials, MEG, is pretty low.
Why is there a disruption?
Demand side is quite good, but there is a lot of imports happening from China at lower prices. So that is putting a pressure on our prices. Although volume-wise, we are doing almost full capacity.
Okay.
So the top lines would be good, but the bottom line would not be that good. As and when China opens up and maybe something happens, the crude volatility and the dollar volatility settle down, then the margins would also improve because the demand in the downstream is quite robust.
Okay. What is the issue with the local supply that you referred to?
Yeah, some of the suppliers have shutdowns in their plants and sudden breakdowns. So that is disturbing the supplies.
But regular maintenance shutdowns? Or?
No, it's not regular maintenance. Like one of our suppliers, Indian Oil, they have taken a 3.5-month shutdown for their MEG plant. Plants also is facing some issues in their MEG plants. So the supplies are disturbed.
So mainly the issue is with MEG?
Yeah, mainly with the MEG.
Okay.
Okay, that's interesting. So all of this will put pressure on your margins, I'm assuming, but crude prices have corrected from their highs. So will that sort of cushion your margins in the quarters to come?
Yeah, it will push in margins in the long run, but while it's going down, it puts pressure on the sales because the consumers stop buying. Also, we have to suffer on the inventory losses.
You also
but going forward, I think it should do better once it stabilizes. And also, third quarter and fourth quarter are better quarters in the year. And the demand is also quite robust because of the winter and festival and marriage season. So demand is quite good.
Okay,
so going forward, I think we should do better in the second half of this financial year.
What about the shipping rates? The logistic costs were very high about 6-8 months ago.
Yeah, they have also come down quite a bit. So that will also help us in improving our export But right now, China is dumping everywhere in the world, so it's very difficult to compete with them in the exports. So exports have also come down. That is also putting pressure on the local markets for the supply.
There was some duty against that, right? So I'm sorry if I don't think, or was that abolished? Or was that PTA? There was some import duty.
Yeah, PTA used to have an anti-dumping duty that was abolished in 2020 February. But now again, investigation on MEG anti-dumping is going on. So something or the other is always there. So that also sword is lying if that comes into effect. Already India is very short of raw materials. Still, if anti-dumping on raw materials come, that will discourage for future production.
But the dumping that you're talking about is end products, right? From China.
No, this is anti-dumping on MEG.
No, what is being considered is MEG, which will hurt if it comes through as you're describing.
Yeah,
but the
right.
dumping that you're talking about,
right now the dumping which is happening of yarn is from China.
Is from China.
Because their internal consumption is very down. So whatever they are producing, although they have also cut production, but still they are trying to dump everywhere in the world at lower prices.
Oh, okay. So can you tell us this dumping of yarn from China, right now, how much is it compared to, say, what it was about 6 to 8 months ago as a percentage?
Like 6 to 8 months ago, it would be very negligible imports, maybe 1 or 2% of the total consumption of India. Now I think it has gone to almost 8 to 10%.
8 to 10%?
Still, I mean,
India's
the local producers reduce their prices to stop that, but that affects the margins. No?
Okay, so 8 to 10% of the total yarn consumed is imported from China, is what you're saying?
Right now, yeah, for last 1.5 to 2 months, it's...
okay, and that's gone up from about 1 to 2% about 6, 8 months ago.
Right.
And what is the price differential of imported yarn versus what is being...
That is around 5 to 6% cheaper than the current prices of the local yarn.
Okay.
Got that. So I know you said it's difficult on the bottom line side to give any kind of estimation, but just a broad idea, ballpark kind of figure would help. How should one think about it? I mean, as compared to, say, to FY22, where would 23 numbers look? What would they look like?
I think we should be able to do very close to the double-digit or double-digit EBITDA in the full year.
Double-digit growth in EBITDA over 22?
Yeah, not growth in EBITDA, the total EBITDA. Growth will not be there. I think we will not be able to match the EBITDA what we did last year.
Last year.
Should be.
Okay. No, that's helpful.
Yeah, we'll leave it at that, sir. Thanks a lot for joining us and giving us an update on what's happening. So that's important, right? We always talk about how raw material prices are getting hit because of what's happening in China. But even finished goods, I mean, the demand has slowed down so much over there. They're dumping all the cheaper goods in other markets like India. So it's hitting the domestic manufacturers. Let's do one thing. Let's take a quick break. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.